You know, every single day, billions of us step into a metal box and just trust that it's going to lift us up. But behind that simple ride is an absolutely epic strategic duel between two giants of the industry, Otis and KONE. And this isn't just about moving people from floor to floor. Oh no. This is about the hidden global industry that literally builds and maintains our city skylines. So let's break down their game plan. All right, so here's what we're going to cover. First, we'll look at the hidden backbone of the industry, what really makes it tick. Then we'll get into our tale of two titans, Otis and KONE. We'll follow the money with their profit playbook, check out the global chessboard they're playing on, and finally, peek at their blueprint for the future. So, what's the big secret in the elevator business? You might think it's all about selling those shiny new elevators for the world's tallest, fanciest buildings. And well, you're not wrong. But that's not where the real story is. The real money? It's actually hidden in plain sight. Take a look at this number, 2.5 million. That is how many elevators and escalators Otis, the biggest player in the game, has under a service contract right now. And that is not just some big number on a spreadsheet, no. That massive portfolio is the absolute financial engine of the company, and pretty much the entire industry. And that really gets to the core of it all. It's the classic razor and blades strategy, right? They sell you the razor, the elevator, and that's the entry ticket. But the real, long-term, high-margin money comes from selling you the blades over and over again. And in this case, the blades are service contracts that can last for decades. So every single new elevator they install is basically a gateway to a lifetime of revenue. It's brilliant. Okay, so let's properly introduce the two players dominating this whole scene. In one corner, you've got the historic champion, the incumbent, Otis. And in the other corner, you have the agile challenger from Finland, KONE. And you've got to understand, they're coming at this with two fundamentally different strategies. I mean, it is a classic rivalry. Think of Otis as a massive fortress. It uses its incredible size, that 2.5 million unit service space, to defend its territory and just churn out predictable, steady profits from service. KONE, on the other hand, is the agile innovator. They're using technology and efficiency like a spear, trying to win new ground and drive growth across the entire life of a building. And you can see the strategic split clear as day right here. When it comes to new elevators, Otis is aiming for the high-end, premium market with its slick, digital platforms. KONE? They're all about value and being the cost leader. And you see the same thing in service. Otis is looking inward, trying to cut costs with its Uplift program. KONE is looking outward, using digital tools to give customers more value. It's a totally different approach at every single level. So, different strategies are one thing, but the scoreboard in business is always the financials. So, let's follow the money. We're going to look at their 2025 numbers to see which playbook is actually delivering the better results right now. We have this really clear divide, right? The fortress versus the innovator. But what does that actually look like when the checks are cashed? How does it all play out on the bottom line? Where's the money coming from, and just how much is there? Okay, get ready for this number because it is absolutely staggering. 91%. That's how much of Otis's entire operating profit comes from just its service division. The new equipment they sell? Just 9%. This one number tells you everything you need to know about their fortress of scale strategy. It is all about service. Now, you look at KONE, and it's a completely different picture. Their revenue pie is way more balanced. Yeah, service is the biggest slice at 42%, but selling new elevators is right behind it at 36%. And modernizing old ones, that's another 21%. You see, they're playing the whole game, the entire life cycle of the building, not just banking on one thing. So, let's put them head to head. In 2025, Otis pulled in more cash, $14.4 billion. But here's the crucial part. They also had a much higher operating profit margin, almost 15%. KONE came in a bit lower on both. So for right now, that Otis strategy, with its massive scale and relentless focus on high-margin service, is delivering the better profits. But hey, this battle isn't just fought on a balance sheet. It is happening on a global chessboard, with markets shifting all over the place and some pretty serious geopolitical risks that could totally change the game. When you look at the world map, things get complicated. You've got strong growth happening in places like India and the Middle East, and things are pretty stable in Europe and North America. But the elephant in the room is China. The huge downturn in their property market is creating major headwinds for this whole industry. And this chart really puts that China problem in focus. Look at this. In 2025, KONE's sales in China dropped by over 11%, which is bad. But then you look at Otis. New equipment sales there fell by over 20%. Ouch. For both companies, but especially Otis, having so much of their business tied to one shaky market is a really big risk. And it's not just the market slowdown. You've got other big risks, too. They're both super dependent on whatever China's government decides to do about real estate. Then there are things like US-China trade tariffs, which are a direct hit to the bottom line. Otis said it cost them $20 million in 2025 alone. And on top of all that, rising interest rates everywhere make it tougher for their customers to get financing. So, with all these challenges, where does the industry go from here? Well, the next battleground is already taking shape. And this fight is going to be one with data, AI, and green technology. You can really see their competing blueprints for the future just by looking at where they put their R&D money. KONE is spending way more, about 2.1% of its revenue, and they're focused on that fusion of cool new hardware and smart digital tech. Otis is spending about half that, and they are laser-focused on using that money to make their dominant service business, their fortress, even more efficient with their Otis One smart platform. Yeah, the digital race is definitely on. Both of these titans are scrambling to connect all their elevators to the internet. KONE's strategy has already put 40% of its elevators online for things like predictive maintenance. But Otis, because its fleet is so huge, has already connected an incredible 1.1 million units. And the goal for both is exactly the same. Use data to predict when an elevator is going to fail before it happens. That cuts costs and makes customers a lot happier. And finally, we've got sustainability. Being green is becoming a huge selling point. KONE is a real leader here. Over 60% of their new elevators ship with these regenerative drives that can slash energy use by up to 65%. That's huge. Otis is tackling the same problem from a different angle, using a modern electronic design in its Gen 360 platform to make it lighter and more energy efficient. Okay, so let's boil it all down. What are the key takeaways from this whole duel? It's pretty simple, really. Otis is the fortress. It's built on a scale that nobody can match, defending that 2.5 million unit service base that, remember, generates an insane 91% of its profit. KONE is the agile innovator. It's betting big on R&D and digital tech to drive a more balanced kind of growth across the entire life of a building. So, I'll leave you with this final, massive question. In a world that is being totally reshaped by technology, shifting markets, and the demand for sustainability, which strategy is going to win in the long run? The defensive, profitable fortress of the old guard, or the forward-looking agility of the innovator? The answer to that is going to define the future of our skylines. And just as a final note, this analysis is all based on independent research from HDIN Research. And of course, it doesn't constitute any kind of financial or trading advice.